very diverse set of risks in individual EMs. Are they all very localized issues, or is there an overarching theme that, the globalization boat, which helped a lot of EMs, is now sort of winding down?
No, I would say that there are many idiosyncratic factors, country-specific factors that are hitting different emerging markets in different parts of the world. Now, there are some countries like China, of course, were hit more directly by the US-China trade tensions. And then there were other emerging markets that also felt the spillovers from it. But if you look at different regions, for instance, if you look at Latin America, or if you look at India, if you look at Hong Kong did have spillovers from the China-US tensions, but it also had the civil strife at home. So we are seeing country-specific factors that made 2019 quite weak for a fair number of emerging markets.
But the global economy, developed economy conditions end up being still a headwind in 2020 for EMs, or could they have the potential to turn into a tailwind if conditions do remain stable?
I mean, the developed world is fighting more of a structural slowdown. Nothing major, but they have to deal with two important factors, which is aging demographics and low productivity growth. So what that means is that if you look at the projections going forward for advanced economies as a whole, we expect them to slow more over time. Now, the US is in a pretty strong position, relatively speaking. I mean, very low unemployment rates. It's had a fair amount of monetary stimulus and fiscal stimulus. So as that winds off, we should see some more slowdown happening. So, I mean, for the emerging markets, I think what's been a big plus is this fairly easy financial market conditions that we have, right? So they're receiving portfolio flows. There's no stress on the financial side, but that's important to keep in mind. That's one. Second, of course, there are some emerging markets that depend heavily on commodity prices. The weakness in global demand has kept commodity prices low. Of course, it's going to depend on geopolitical tensions and what happens with that. But more generally, I think, the developed world, if it stays the way it is, and there is no big downside news that comes out of, say, the euro area, and financial conditions remain easy, I think the emerging markets would have positive spillovers from this.
Sure, but important to get the structural stuff right in emerging markets if you want that growth kicker, because it's not going to come from the global economy.
Yes, I mean, if you want a significant impact on your potential growth, it would come from homegrown domestic structural reforms, yes.
Sure. What's been interesting for emerging economies, is, at least in Asia, is also the extended period of low inflation that's continued. I think for a while everyone kept saying food prices will mean revert, oil prices will sort of move up. But we've had a fairly prolonged period of low inflation. Is the low inflation problem in some ways transferring from developed economies to emerging economies?
We're certainly seeing inflation having come down. We're not talking about a year or two, but over
10-year period.
Decade.
Yeah.
This is a reflection partly of successful inflation targeting in many parts of the world, not just the advanced economies, but also emerging markets. In the past, it used to be that if your currency depreciated, you would see a fairly high pass-through to inflation. Yeah. And you're seeing that pass-through having come down. So, I mean, that is a welcome sign. I think that is better insulation for your domestic inflation from external shocks. So that is welcome. In India, of course, food inflation is high at this point. So there can be weather-related events that lead prices to move around. I think it's very much the case that central banks have to ensure that inflation expectations remain anchored, and that's in both directions, right? So that it's neither the case that people expect inflation to be going up, nor is it that they expect inflation to be going down and it's closer to the target. And that's something that all major, especially the major central banks, are working hard for. And a bit of the rethinking about central bank frameworks has exactly to do with this, which is that, how do we get to our targets a little more easily than what they've had to deal with.